The S&P 500 grinding higher today, recouping some of yesterday's losses, up 0.25%, closing at 68.2937. We've been in this consolidation range over the past two trading sessions, just under the 68.50 level, basically sandwiched between 6,900 and the 6,800 strikes, which both have larger gamma exposure concentrations. Zooming out to the daily candlestick chart, we're at this resistance area, kind of a downtrending resistance from all-time highs just above the 6,900 strike. The largest gamma exposure remains at the 7,000 strike, and we're seeing prices very sticky up here as we're consolidating right between 6,800 and 6,850. And so the market structurally has several things going in its favor. The options market in particular continues to show some upside skew in both the amount of daily options volume at out-of-the-money strikes to the upside, as well as gamma exposure at out-of-the-money strikes as well, highlighted here by the 6,900 and the 7,000 gamma exposure concentrations. Another structural factor in the overall market data is basically implied volatility and the volatility index. The VIX is now trading below 17. We'll talk about that a little bit later in the video. Implied volatility has also reduced quite substantially. Just a couple of weeks ago, we were sitting near 80 on our GEX weighted volatility gauge. This is basically telling us that currently implied volatility has only been lower 37.9% of the time in the last 52 weeks. So implied volatility coming way down over the past week to week and a half, while gamma exposure is remaining in positive territory. And so these two factors, positive gamma exposure and lower implied volatility, basically create a buy the dip environment. And that's basically what we're seeing here as we are consolidating in this 6,800 to 6,850 zone over the last several trading sessions.
Thanks, Anthony. Let's shift over to looking at IWM, which actually was divergent today. We saw indecision across the board early on, but ultimately it was SPX and QQQ that ended up taking the lead, with IWM falling behind. And we have this channel in Discord that we call the Geek Zero DTE Setups channel. And today we saw a shift with IWM toward the negative side in terms of the GEX picture, and we translated this over to RTY, which are the Russell futures. So in this case, we used RTY. So you can see, looking at our time machine at that time when we made that post, we saw a positive GEX shift from the 247, 248 area down to this larger GEX cluster at 243. And as you can see, as the day went on, IWM actually ended up resolving lower, making it down to 245 right at the end of the day. So it didn't hit that 243 target. And we noted intraday that the picture had shifted yet again, but it still gave us a chance to exit our short with a profit, and we netted $850 on that short trade. Before we move away from IWM, let's just look at the daily picture and note that even though we placed a day short today, the big picture still looks constructive toward the 250 and maybe even the 260 area, which is the upper Keltner channel on the daily chart. So as long as IWM can hold this 245 GEX cluster and ultimately this 240 GEX area, the bullish view should remain intact. If we lose 240, close below that on a daily basis, we may end up retesting these lows that we saw earlier in November.
Thanks, Sean. Next, let's take a look at Apple. Apple moving up nicely today, up 1.09%, closing at 286.19. Apple's been in a tight channel to the upside ever since this breakout that we saw early in the month of August. Gamma exposure has been skewed to the upside as well between the 270 and the 300 strike. We actually currently have a position on in Apple. Back on November 21st, we entered into a iron condor position expiring in the December 19th expiration, focused on the range between the 270 and the 290 strike. From our post at the time, Apple was trading around 271. You see the gamma exposure all skewed to the upside. This is one of our favorite setups, retracing into technical support with gamma exposure all concentrated at higher strikes. And so we were able to sell those iron condors at $2.40. We've got a couple of weeks left on this particular position. As long long as price can stay between the 290 strike and the 270 strike over the next week or two, this position will continue collecting premium. One caveat to that, however, is growing gamma exposure up at the 300 strike, and so price could continue up past our wings between 290 and 295. If that does take place, we will likely roll this position up the chain and try to sandwich our wings around that 300 strike. So far, though, most of the volume in the options market is between 280 and 290, and most of the gamma exposure is currently between the 280 and 290 strike as well. So we'll give this a few more days and see if we can keep it below 290, allow our iron condor to continue collecting premium, and get out at a nice profit.
All right, let's take a quick look at the VIX. I have the daily chart pulled up, and the VIX continues to see selling pressure. The current largest negative GEX cluster is at 17, and there's substantial GEX at 16 as well. The other thing I'm watching is the whole moving average, which pretty soon, potentially within the next couple of days, has a shot at crossing under the VIX. And once the VIX is over the whole, that will trigger a buy signal, according to my methodology, and potentially risk seeing the VIX rebound up toward the 18 to 20 area.
All right, let's take a quick look at Bitcoin. Bitcoin up pretty big today, 6.45%, currently trading at 91,800. The lows that were put in place a couple of weeks ago, just above that 80,000 strike, appear to be holding after yesterday's sharp decline. Buyers stepping in here, but we're still locked into this zone between 80,000 and around the low 90,000 range. Gamma exposure, as we've been mentioning over the last week or so, has been prominently at the 100,000 strike. That also coincides with the 50-day EMA currently sitting at 98,900. So in terms of a potential mean reversion play, this 100,000 strike looks to be our initial target as buyers potentially step back into crypto and Bitcoin specifically. Looking at the options market, however, we have been seeing trading volumes all over the place, including below the 80,000 strike as well. So that is something to note. If we continue seeing big volumes coming in below that 80,000 strike, that could eventually signal that market participants are expecting further downside. So that's something to keep our eye out for. But for now, it does look like some momentum is coming back into the mix. And so as long as we continue to see yesterday's low hold, I think the next obvious target is a mean reversion move back up to this 100,000 level. And it's also a natural resistance point if we just look at price going back all the way into the April time period.
Thanks, Anthony. Let's go back to just before Thanksgiving when we identified an opportunity in our live stream, which is free and available for our guests to join via our homepage. We found an opportunity with Walmart. So we identified that Walmart had large positive GEX between the 105 and 115 strikes. So we ended up taking 5 contracts of the December 19 107, 110 call debit spreads at 113. So you can see Walmart had a false breakdown and then a break above the 50 EMA. And we waited for the retracement that came right after that. And we ended up entering those 107, 110 call debit spreads at a pretty good time, targeting this 110 strike. Fast forward to today, Walmart had a very nice move right off of our entry price, which was very good timing, right up above this 110 area that we were targeting. We did see GEX grow even further at 115, and this does look like a relevant target going forward. And we'll be watching Walmart in coming days for potential future entry.
And guys, Cyber Monday may be over, but our Cyber Monday sale has been extended. You can get an additional $400 off our yearly Portfolio Manager tier subscription. Use code CyberMonday25 at checkout. This special is going to be ending very soon, so definitely take advantage of it while you can. Members get full access to our Gamma Exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you'll also get access to the premium channels in our community Discord. We've got a ton of great traders in there sharing their own trade setups and strategies. And you can also track our trades in real time as we manage our options portfolio. I'll put links in the description below so you guys can check all of that out. Thanks so much everybody for watching, and we'll see you guys in the next video.